Welcome to another edition of Chart of the Month. This month, September 2025, what I wanted to do was talk about asset allocation. I think asset allocation is a really important topic right now because of how the market has been performing as of late. We've had a very strong market this year, and even more so, the summer has been continued to trending up. And so, whenever the market is trending in a certain direction for a longer period of time, we get a lot of different questions from clients, and wanted to maybe address why or why asset allocation is so important. Um, and so, one side of the coin we get, especially when the market is trending up, is at what point do we get out of the market? What point do we take profits, get to the sidelines because this can't last and it can't go up forever? The other side of that coin is that some clients want to participate more in what's going on, especially if the market's trending up. They don't want to feel left behind. There's a lot of headlines about making a lot of money and how well companies are doing, and they feel the need to want to jump in and take on more risk. And so, why I wanted to talk about that is we want to put some data behind asset allocation and why it is so important. And so, on the screen, we have a asset class return quilt chart. And so, what a quilt chart does is it takes the individual asset classes and put the return in from top to bottom, the best to worst, every calendar year, and ultimately you get what looks like a quilt. And so, this particular chart goes back the last 15 years, 2010 to 2014, and each individual asset class is posted with their annual return. Um, Along the middle, you see asset allocation. And asset allocation in this particular chart is just a balance or certain percentage of all the asset classes put together, as just like you would build a typical portfolio. And as you can see, there's generally not a asset class that is always at the top, and there's generally not one that's always at the bottom. Were a few different trends. In the 2010 2012 range, you see that real estate trusts performed well over consistently for 3 years, and you can see in 2012 to 15 era commodities did not perform very well for a few years in a row. But ultimately, it's very rare for an asset class to be at the top consistently or at the bottom. And so this illustrates why asset allocation is so important. Is that you having a balance of all of these asset classes together in your portfolio generally keeps you from being at the bottom, but it also does leave you not always at the top. And so you generally finish somewhere in the middle. And so, two things that this chart also illustrates on the far left, the annualized return for each asset class. But the column right next to it, that's titled VOL, also illustrates the volatility of those asset classes. And so, a great example is small cap equities. Small cap equities is the second best performing asset class for the last 15 years, averaging roughly 10.3% annualized return. But it's also the most volatile at 20.6%, which means, yes, you might be getting good returns, but it's also going to be very up and down, very, peaks and valleys. But if you go all the way to the right, you see year to date where the asset classes are. And so right now, a balanced portfolio asset allocation is doing about 10.3%. So again, not at the top doing the best, but it's also nowhere near the bottom. And so this just illustrates how important staying invested for the long run, but also staying within your asset allocation and how important it is to have a balance and a mix of multiple asset classes. One of the one of the trends or one of the conversations we've had over the last few years is that a lot of people don't want to invest in international markets because they haven't seen very good returns out of them for a long period of time, and US has dominated the global stage. But fast forward to this year, the two best performing asset classes for 2025 so far have been developed international equities and emerging market equities. So if you stripped those out of your portfolios, you would be leaving a lot of returns on the table. So again, staying balanced, staying long-term focused, and staying within your asset allocation and your risk tolerance is ultimately the most important thing when you're looking at your long-term goals. Hopefully this helps shed some light on why we stress asset allocation so much in our client reviews. Feel free to reach out to me with any questions, and I hope you enjoyed this month's chart of the month. We'll see you next month.